Good morning, ladies and gentlemen, and welcome to this deep dive we do in blue chip companies post their earnings. Our guest today is the top management of Cummins India, the very well-known maker of power generation equipment as also industrial products. We are joined by the CFO, Mr. Ajay Patil, to discuss not only fourth quarter earnings for the fiscal year FY24, but a look ahead. Good morning to you, Mr. Patil, and what a lovely day to have you as far as Cummins is concerned. What a strong show you have. A 50% rise in fourth quarter net profit to about 475 crore rupees. Sales have surged 20% in the past fourth quarter to 2,316, and lo and behold, operating margin at a time when everybody is crying out just to save their margins, yours stand at 20.9%, which is an uptick of 421 basis points. Mr. Patil, I'm sure you are a very, very happy man.
Yeah, good morning to you, Shailji, and the viewers as well. Indeed, delighted to deliver a quarter and a full year, in a strongest possible manner we could, and feel happier that we sustained our growth to 16% year on year when you look at the full India fiscal year. Importantly, within that, I think our domestic revenue has grown 28%. And the three businesses that we have of power gen, distribution and industrial, all of them have grown in excess of 20% on a full year basis. So feel happier on how we have executed on the domestic side. However, on the export side, we have seen, and we have been providing that kind of a commentary throughout the year. We were expecting softness with respect to exports market, and that turned out to be true. Our exports declined as a result, but still at a healthy 17% of the total revenue. Of course, historically, our exports as a part of total revenue were generally at about 22 to 25%. So definitely some reduction there, but was fully compensated by a strong growth on the domestic market.
Okay. Patil sir, let's just dive deep into the numbers. Ladies and gentlemen, just to give you a background, Cummins is one of India's finest MNCs. It's into the power generation equipment, maker of industrial products, and is also into distribution. All three businesses have surged dramatically in terms of sales over the past quarter, as also on the full year. The numbers we'll be discussing in great detail. Ajayji, first, what was the reason behind this surge in operating margin to the extent of 421 basis points, and do you think this is sustainable?
No, definitely. In the context of a full year, which is generally a better representation, if we look at our margin expansion, there are four important attributes of how margin expansion we look at from our perspective. One, we look at the actions that we can take on the pricing side, such that we are able to extract some margin points out of pricing. The second aspect is that the commodity cost certainly has benefited with respect to how we have seen the commodities softening in the last year that has gone by. Equally important, the aspect of pricing, because in our previous conversation, I did mention that in our case, pricing is more of a lag effect. Yes. So the commodity increases that we saw 2 years ago and the response to those commodities in terms of pricing actions, they typically create a lag effect for us because we take the hit first and then the pricing action comes. That is something which has continued to benefit. Third thing is we continue to manage the operations in a manner that the increase in revenue, we are able to extract a volume leverage out of our overall operational costs. Yes. And of course, last but not the least is equally important in terms of how we manage all of our discretionary costs throughout the year. We've been very diligent in terms of how we look at our overall cost structure. And we did our best despite the inflationary pressure in terms of containing our cost in a manner. So when you put these four things together, really contributed. Of course, there is an element of some one-off non-recurring benefits that we receive. But even if I discount that, it still continues to show a pretty robust year-on-year margin expansion.
Okay, ladies and gentlemen, just a bit of a background. So, Cummins responds to the GDP growth that we are seeing in the construction, in the real estate space, and of course, railways is a very big customer. It has about three segmental revenues. Power generation in the fourth quarter, sales have grown up by 40%. Distribution sales have increased 25%, and industrial product sales have surged 60%. So you can well imagine the kind of demand explosion that is coming in for Cummins products. Mr. Patil, let's focus on how the Modi 3.0 government is shaping up. There is continuity not only in the political setup but also in government policies, as also primarily your major customer railways. The present incumbent is the same as he was 5 years ago, and that possibly is a very big plus point for companies such as yours. How do you see the railway business expanding, and what are the new products that you intend to offer to this public sector enterprise?
No, certainly, I think, in the context of broader, economic context, when you look at a policy continuity, political stability is extremely important with respect to how the continued faith and confidence in the economy remains intact. And having a government now in place means that A, there is a political stability, and B, the policy continuity. So given the emphasis of this government, which is predominantly looking at economic growth through supply side management, which means the government continues to find ways to stimulate the economy through public capital expenditure. And we have seen that throughout the last 10 years, pretty strong emphasis on public capex, whether it is on infrastructure, whether it is on social sectors, or whether it is for national security. All of these three primary areas where the government is spending a significant amount of its capex. Now, the same government coming in, we anticipate that the policy direction would remain broadly the same. Of course, it will be very interesting to see what happens in July budget presentation, because that will lay out the broader policy direction also. That is one data point. The second is when we look at certain segments, of course, railways is one of the important segments for us. And what we continue to do is the changing trend in the railways. We have seen the emphasis of the current government to electrify the railway network. And we know over the last 5 years, the broad gauge network is significantly electrified, even as we speak, maybe more than 90%. Now, this trend is something which we had anticipated and accordingly positioned some new products into that segment. And I think that has really helped us maintain our revenue stream coming out of railways. Having said, we also have a fairly diversified revenue profile. Power gen, distribution and services, and industrial. And within industrial, we have a broad range of various segments like railways, construction, compressors, mining, marine, oil and gas, defense. So we have, in that sense, diversified our revenue profile in a manner to broadly, represent the overall economic growth of the country. And that's the reason we correlate ourselves to the overall economic growth of the Indian economy.
Fair point. Let's look at these full year numbers as far as sales is concerned. You've clocked in somewhere like 8,958 crores, which is an year-on-year expansion of 15%, almost 2 times the GDP growth that we are seeing. Is this a number that is sustainable in the coming 2 or 3 years?
Shailji, that is exactly what we have guided as our guidance for the full year. We have guided that we are looking forward to growing our revenue year on year in double digit. And the context of that guidance is primarily coming from where we see the broader economic growth of India is going to be. Because if, as I made a point earlier, the economic growth of India is largely through a supply side driven growth as opposed to demand driven economic growth, which means a continued capex from the government and to some extent a private capex supplementing, couple that with the consumption, is where the broader assessment of 6 to 8% kind of a forecast that is there for GDP, add about 4 to 5 percentage point of inflation, we are looking at the economic expansion of about 10 to 13%. And what we intend to do is to try and find ways to either maintain or outperform this.
Okay, fair point. So nominal GDP growth in India is somewhere like, let's say, 12, 13% and maybe 2, 3, 4 percentage points above that. Fair point. Mr. Patil, let's look at one of the most, how should I say, fastest growing segments in the economy, which is the advent of data centers. Globally, a lot of tech MNCs, Fortune 500 companies are outsourcing their data centric business to India, and for Cummins it represents a very, very strong business entity. For the fourth quarter and full year, how did data centers as a business perform, and what is your outlook, sir?
No, definitely. I think when we look at in the context of last 3 to 4 years, data center emerged as one of the fastest growing end market for us. And the growth for data center is driven by 3 or 4 important aspects. One is the extent, speed and depth of digitization that is happening in economy. I mean, traditionally, let's say if we look at 5 years ago, broadly speaking, the digitization was largely in the banking and financial services and to some extent in e-commerce segment. But what we have seen over the last few years is the expansion of services which are electronically delivered, the transactions which are getting processed digitally, including even you look at something like an entertainment which is largely getting delivered through an OTT platform. And when you look at all of these trends and then look at the regulations which are mandating the data to be retained in country, I think the computing power to support this is where the data center growth is coming, number one. Number two, when you look at another data point on the mobile phone penetration and the extent of internet connectivity that is available today, means that the trend of this will continue to accelerate for years to come. And when you look at that and the on-ground assessment of what extent we have the data center capacity in country, I think end of last year it was somewhere close to 1.3 gigawatt. And where the need is, we are looking at a significant gap with respect to the capacities that need to get added up. And therefore, in our view, data center is a multi-year growth opportunity, number one. Number two, from our own perspective, we have the products which can support the level of reliability and uptime that is required by the data centers. And we believe we have the best product to support those reliability standards.
Okay, in terms of data centers, Mr. Patil, this is the genset business which is the most impacted positively. Apart from the gensets that you provide to these large-scale data centers, what else is Cummins' menu of offerings exposed to this business?
I think when you look at it from a Cummins point of view, of course, the genset is a first entry as far as we are concerned with the customer, because it is and then followed that up by a services and parts support that is required for the life of the product. So for us, it's a combination of two businesses, the power gen as well as the distribution business, which for which we generate revenue out of every segment.
Okay, fair point. Now, these, over the last 10 minutes, we've discussed what has worked very well for Cummins. Let's look at some pain points. And of course, exports is something that comes to my attention. They've dipped quarter on quarter by 30% to 344 crore rupees. And annually also, they've slipped to about, 1673 crore rupees, down about 18%. What were the reasons behind this drop in exports, and do you see this trend changing in the current financial year to March 25?
So certainly, I think throughout the year we have been giving that sort of a commentary about what we were seeing, a softness in the demand across all of our exports geographies. And I think in our current earnings call, we did indicate that we see that the exports demand is now getting towards the bottom, and it would at some point of time starts to rebound. The only thing which is not very clear as to how much time it will take to rebound, whether it takes 1 quarter or 2 quarter or 3 quarter, that's a time to tell story. But the fact is, we do see that exports are reaching towards the bottom of the cycle, and they can possibly stay at the bottom or can start to rebound.
Okay. The other point is that by July 2024, the new 4 plus Central Pollution Control Board norms would be in place. One, is Cummins' entire portfolio of products in sync with that? Two, will that mean higher margins or will it mean lower sales because prices will go up?
So two things are important. One is the new emission norms were originally to go live on July 1st of 2023. But sometime in June of last year, towards the end of June of last year, the government provided one additional year and allowed continuation of CPCB2 and CPCB4 plus products to be sold for 1 more year. Now, come July 1st, 2024, only the new emission standards products will be allowed to be sold. As a reminder, the emission standards are applicable to products up to 910 kVA. Products above that rating continues to be in the CPCB2 or the previous emission standards. Therefore, what we are seeing here is not just an incremental change. To answer your second question, we are looking at a step change where the engine products and the entire family need to be migrated to electronics engine. Looking at the original deadline of July 1st of 2023, our products were ready then. So effectively, we were ready on time. And therefore, what we have experienced during the course of the quarter that we managed to sell quite a good number of sets when it comes to CPCB4 plus also. Number three, given the nature of product, which is very different and not comparable to the previous generation of the product, the pricing, of course, has an impact. The prices will go up. However, we do expect that the price discovery process will take another 2 to 3 quarters before we can really make an assessment with respect to what the true price increase is. Because thus far, we were one of the first to be ready with all the products. So we have, gained a certain amount of pricing. That pricing will have a discovery phase over the next 2 to 3 quarters. And our endeavor, of course, continues to be giving the best value to our product, for our product to the customers at a right price. And of course, when we are growing, we would also like to grow profitably. So our endeavor is to see that the new products continues to have the same, if not higher level of profitability.
Okay. Mr. Patil, let's look at some part of the market which has over the last 12 months really appreciated the kind of growth your team has clocked. Cummins is up 100% the same time we spoke to you last year from those levels, and I'm sure everybody at the company must be very happy with the performance of how the stock has done. One, has that added a layer of how should I say stress within the organization as to how to sustain this wonderful performance? And two, what do you want to leave a message to shareholders for the next 2-3 years?
No, first and foremost, we are delighted that the market has responded to our performance in a manner that they have rewarded. We, of course, have no control over where the share price is. Our job is to continue to focus and deliver results as strong as we can. And then it is left to the market to respond. Given where we are, here is how I would position in terms of where we are. If you think about the growth of India over the next several years, where is the growth coming from? And then you will notice one common factor that, broadly speaking, you look at any sectors of growth, we have a role to play. The reason I say that, if you look at infrastructure, if you look at manufacturing, if you look at healthcare, if you look at hospitality, if you look at data center, if you look at commercial real estate, if you look at residential real estate, if you look at mining, if you look at railways, if you look at marine, you look at oil and gas, construction, you look at any of these segments, we have our own products there, which are playing an important part for keeping those sectors efficient. Number one. Number two, purely from a business model perspective, if you look at our business model, on one side, we provide backup power. On the other side, we provide equipment for industrial applications, which drive productivity and growth in the economy. And in between, we have a business which provides service to these equipments on power gen and industrial segment. So this business model, when you look at, we feel we have a virtuous cycle of business. And number three, within that, if you look at our power gen business, backup power is such a critical aspect of anything that we put together as a facility. Therefore, we see that sort of a continuity of a strong business model that we have put in place. When you put all of this factor, like we have guided for this year, we endeavor to sort of grow double digit this year. And we will continue to do our best to see that we sustain our growth momentum for years to come.
Right. Mr. Patil, as always, every quarter, we look forward to joining us back in the coming quarters, and we wish you possibly the best, how should I say, revenue and sales growth. Let's hope that exports come back, and the kind of wonderful work that Cummins has done in expanding top line, in having an unmatchable margin profile, and putting in strong profit after tax numbers continues for the quarters to come. Thank you so much for your time, and I hope you enjoyed the show as much as we did. What a pleasure.
Thank you so much for inviting me. Always a pleasure speaking to you and the audience. Thank you.
Okay. That, ladies and gentlemen, was Mr. Ajay Patil. He's the CFO of Cummins India, a stock that has appreciated 100% over the last 1 year and handsomely outperformed the benchmark Sensex. The company reported a 50% rise in fourth quarter profit at 475 crores, and revenue rose 20% to about 2,316 crore rupees. The company has given strong projections for annual sales to exceed nominal GDP growth by about 2 or 3 percentage points. Thank you so much for watching. Continue to be with Business Today Television. The news is the best here. TVS